Welcome everyone to Vested Interest. This is Shane back for Stock Pick of the Day video. It is Monday, August 5th, first day of a new trading week, and a big drop overall in the market. If you are anyone who looks at the market at all, you noticed, or even the news for that matter, because a lot of sites are covering it. Big drop in the market. So it was easy to find companies that were down on the day. We're going to take a look at Stryker. This is out of the healthcare sector. Now, before we get too far in the video, if you could do me a favor, it really helps out the channel, really helps out a small YouTube creator like myself. Spread the videos a little further. Go ahead and hit that thumbs up button down below if you find any value in the content, if you are a dividend growth investor. If you have not done so, most of you out there who watch the channels actually are not subscribed. So please hit that subscribe button. It really does help out me tremendously. It doesn't cost you a thing. Hit the notification bell so you're notified at any time we put out any new content. I do these videos Monday through Thursday whenever the market is open. We take a look at a company like Stryker that we're going to look at today and see if it is possibly presenting any value and makes it onto my watch list. Just because it makes it on my watch list does not necessarily mean I'm investing. It just means it's one of the companies I want to do more of a deep dive into. And for those of you who've taken the time to do that, hit that thumbs up button, hit that subscribe button, hit the notification bell, and drop a comment down below. Let me know what you think of Stryker. Is Stryker in your portfolio? Is it one you're watching? Is it one maybe you're selling? A lot of selling going on today. Maybe you are selling some stuff. So let me know if you are making any sales today. Looks like a lot of people are. Let's get back to the video. Now, this is the vested interest stock screener. This is how I look at a company on a high level to see if I am interested in adding it to my watch list. It must meet 5 of 8 for Stryker today. If it was a financial company like a bank or an insurance company, I add in price to book. You can use price to book for any company. Just don't use what I've got written here for financial companies. It's price to book with 1 equal fair value, anything under 1 undervalued, anything over 1 overvalued. But that is not necessarily the case for all companies. For some other companies out there, you would need to compare their price to book to other companies in the same sector and in the same industry. So I don't use that for all companies, just when I'm looking at banks and some insurance companies out there. Now we are talking about Stryker. You can check them out at www.stryker.com. That is www.stryker.com. That is their homepage where I pull this information from. Again, they are out of the healthcare sector. Stryker is one of the world's leading medical technology companies. Alongside our customers around the world, we impact more than 150 million patients annually, and their sales are, just like they said, worldwide. They focus on medical and surgical procedures, orthopedics and spines, neurological, better connected services. So, healthcare services, care settings. So they might be providing, you see the bed there, some of the healthcare equipment that you're sitting on, sleeping on, training and education. I have a buddy, actually, he doesn't work for Stryker, but he works for a healthcare company, and he trains the doctors on new equipment whenever they get new equipment. So they might have a dummy or something that they use for practicing surgery. So if you go into a college or a school where they're teaching medical surgery, they might use a dummy to do that. He goes in, will train them on those type of equipment. So he doesn't work for Stryker, but he does work in the healthcare sector. So shout out to my buddy Scott Fogel, who I was in the Air Force with as well. Hope you're doing all right, buddy. But again, www.stryker.com. That is their homepage where I pull this information from. Out of the healthcare sector, really focus on surgical technology and equipment. Now, the reason we are taking a look at Stryker Corporation, down 4.71% on the day. Not the biggest drop on the day, but down nonetheless. I haven't really covered this one. I think I covered it maybe a year or so ago, maybe a little longer than that now. Thought we'd revisit it. Stryker Corporation, ticker SYK, closed out the day at $315.94, down 4.71%. 52-week range as low as $249.98, as high as $361.41. So they are kind of floating in that mid-range, probably leaning a little bit more towards their 52-week high than their 52-week low. They are not within 15% of a 52-week low, so they would not get a check there. They do have a market cap of $120.397 billion, beta of 0.9, so they are less volatile than the overall market. That's what beta stands for. It's the volatility in the overall market, 1 being the market. So pretty volatile here, though just slightly less volatile than the overall market. PE ratio a little elevated on this one, $35.14 per share. EPS sitting at $8.99 per share. Earnings date will be coming up sometime between October 31st and November 4th. Forward dividend is $3.20 paid out on the year. They are a quarterly payer. We'll see what they pay per share per dividend here in a little bit before we wrap up the video. Dividend yield is a little low, 0.97%. If you were to wait and see if they drop back under the 300 range, you could get them closer, probably in the 1.5 range there, depending on how far they pull back. Ex-dividend date, June 28th, so we are past that. They did pay out, looks like on July 31st, so it just paid out. So if you were to buy them now, you would be in line for the next dividend, but it is going to be a while. 1 year target estimate, at least according to Yahoo Finance, where I pulled this information from, $378.81. So they see some upside, and it's setting a new 52-week low here. Now we're going to jump over to the right. We're going to look at dividend yield theory. To do that, we look at their 5-year dividend yield average of 1.05%. We compare it to their current 0.97%, or over here where it says forward 0.97%, same number. Since it is lower than their 5-year average, they're pretty close, but it is slightly lower than their 5-year average. That actually speaks to some overvaluation. Not a lot, pretty close to fair valued here. And then, like I said, if they were to continue to pull back, you could get them over their 5-year average, which would speak to undervaluation. But right now, they are, based on their typical 5-year dividend yield average, they're slightly overvalued. Payout ratio is low at 35.12%. Now we're going to take a look at free cash flow. I like growing free cash flow because typically if a company has growing free cash flow, it means they are going to grow that dividend along with it. Going back to 2020 here, you can see 2.7 billion in free cash flow. 2021, 2.7. Well, let's go a little deeper. 2.79. So 2,790 million in free cash flow. 2021, it was slightly down to 2.73. So not a big drop, but a drop nonetheless. But then it continued into 2022, down to 2 billion, and 2023 looks like they're rebounding up to 3.1 billion. So after 3 years of, again, 2020 to 2021, not a big drop. That was a pretty big drop from 2021 to 2022. So 3 years of declining free cash flow. They are back growing again. Hopefully they continue that trend. Now we're going to jump over to stockanalysis.com. I am not affiliated with either of these sites, stockanalysis.com or Yahoo Finance, just two of the sources I like to go to for information. You pick any sources that you like, though I do recommend you don't blindly just look at one source. Make sure you're looking at 2, if not 3, to make sure the information you're getting is accurate and up to date. Now, 18 analysts, they consensusly call it a strong buy. It is right on the edge there of a buy and a strong buy, but still strong buy nonetheless. So if you were to go to their website, you'd be able to click on each one of these: strong sell, sell, hold, buy, and strong buy, and see how many fell in each category. Looks like more are calling it a buy and a strong buy, maybe some holds in it as well. But overall, the consensus is just over a buy to a strong buy. They have a low estimate of $315. It sits just above that, 1.38% above that currently. Average estimate of $373.83. That would be a 17.03% increase from where it currently sits. And if you happen to hit their high of $406, that would be a 27.11% increase. And you could collect that just under 1% dividend yield if you were to buy them now. If you bought them, a little lower, maybe you get into the 1% range. We're going to check out statistics here. I like to look at return on equity and return on invested capital and see how well the company is reinvesting its capital back into itself. That's making acquisitions, that's buying back shares, that's making repairs to factories or divestitures, whatever they're doing with their capital, not divestitures, but reinvestments back into plants, buying new equipment, building new plants, whatever they're doing with that capital tells you how efficiently they do it. Return on equity, I like 10% or better. They're sitting at 18.3%. Return on invested capital, 11.3%. Now, EPS growth, I like 5% or better forecasted over the next 5 years. They've got 15.04, so very high forecasted EPS growth, really like that. With revenue growth, very high as well, 7.5, high single digits anyway, 7.5% in forecasted revenue growth. Those would be very, very good numbers if they come to fruition. Let's check out the dividend history here as we wrap this one up. Quarterly payer, again, payout ratio is low, 35.67%. I like under 75%, so very low in my book. Dividend growth is very nice, high single digits, 6.96% dividend growth. 14 years of dividend growth. Buyback yield is negative. That means they're buying back shares when they are a little overpriced. We don't like to see that, but I do like to see that they're buying back shares. Although whenever we looked at it, it doesn't look like they've been buying back any over the last 3 or 4 years. Shareholder yield of 0.57%. It's in the positive, so that's a good sign. 2021 in December, they were paying 69 cents and some fractions of a penny in dividends. They raised that up in December 2022 to 75 cents. Most recent raise was December 2023, up to 80 cents. That's where it continues to sit. So 80 cents per share. And I would expect if they continue this dividend growth, we will see another dividend raise in December of 2024 here. They do pay out on the January, April, July, October timeframe. I do like that. Not a lot of companies pay out on that monthly or quarterly time span. So that's nice to see. If you needed something in the January, April, July, October timeframe payout to kind of even out some of your other shares, a lot pay out in the March timeframes, a few in February, but January seems to be the least payout months that I've run across anyway in my portfolio. So might be one here in the healthcare sector to look at. Let's look at the screener and see where it stacks up. So starting with understand the business, that's why we go to their homepage first. Growing free cash flow. No, we had 3 years of declining free cash flow and then growth over the last year. Growing dividend, yes, nice high single digits. Dividend payout ratio is under 40%, 35% range. Check valuation. Dividend yield theory says it's potentially overvalued. No check there. It is not within 15% of a 52-week low. It is not in my portfolio, so it can't be below my cost basis, so no check there. Return on invested capital and return on equity, both over 10%, check there. And earnings per share growth at 15%, check there. That's 1, 2, 3, 4, 5 of 8, so it just slides on, and I believe it is already on my watch list, though I do have a pretty well built out healthcare sector right now. But if I was looking to add, this might be one, and I think it is one that is in my watch list already. Well, that is really it. Let me know what you think of Stryker. Again, is it in your portfolio? Is it in one you're watching? Is it one you maybe are selling? Again, a lot of selling today. This one down a little over 4%. So obviously there was some selling in this one as well. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Stryker you'd like me to cover in the Stock Pick of the Day series, drop it down below. Make sure that notification bell is clicked so you can be notified whenever we drop that video for you. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.